Welcome back to the Bite Pod, where we break down the real issues shaping global trade, compliance, and cross-border risk, one conversation at a time. I'm your host, Anne Retho. Today, we're diving into a topic that has taken over inboxes, industry forums, and compliance teams everywhere: delivered duty paid, or DDP. Whether you're evaluating a supplier's offer, trying to understand your exposure, or just navigating through the noise, DDP has become one of the most misunderstood and consequential decisions importers face. To help us unpack it, I'm joined by Andrea Jeglum, an associate at Sandler, Travis & Rosenberg. Andrea focuses on customs compliance across tariff classification, valuation, country of origin, FTZs, trade programs, and agency requirements, covering everything from biopharma to animal products. Before joining ST&R, she spent more than 15 years leading global pharmaceutical and biotech companies through the thorniest parts of global trade and regulatory compliance. She's also a licensed customs broker and serves on the board of Women in World Trade New England. In other words, if you have ever wished you could sit down with someone who truly understands the legal, operational, and strategic sides of DDP, this is the conversation for you. That being said, the conversation today is provided for informational use only and should not be considered legal advice. Hiring a lawyer is an important decision that should not be based solely on our conversation. So we're going to talk about what DDP really is, why suppliers sometimes appear to pay lower duties, what liabilities buyers still carry, and how enforcement is changing. And I'm really excited to have you here, Andrea, so welcome.
Thank you, Anne. Happy to be here.
Before we jump into it, you do have such an interesting background yourself, being a licensed customs broker and also an attorney. Can you share a little bit of background on what led you down this path and into this niche of customs law and trade compliance?
Sure. And like most people who fall into trade compliance almost by accident, I started off in finance and tax. And at the companies I worked for, it was trade compliance was closely aligned with that in the finance department, because it's an easy match for tax and those, kind of other reporting decisions. So I did that. I got to try it out a little bit and decided I really liked it because it's really a combination of finance and tax, and also supply chain planning and kind of international relations and understanding a global perspective. So it's really a good place to do lots of different things and work with a lot of different people in all different areas of the world. And that's why I decided to stay in a trade type role. And then I worked for 15-ish years in pharma, and then decided to quit and go back to law school full time. So that was, not necessarily such a big deal, but certainly a very big change.
Yeah, definitely. That's great. And I think, as we talk to more and more people in the trade community, it definitely does seem like people kind of fall into it, but all with similar interests, that like international business, wanting to work with people, liking the systems of it all. So that's great.
Yeah, and so true.
And so jumping into our topic of today, for listeners who may not live and breathe Incoterms, what exactly is DDP and why is it in the spotlight today?
Yes, so DDP, or delivered duty paid, is really just one of the 11 Incoterms under Incoterms 2020. So that's simply all it is. And as a reminder, because a lot of people get confused on Incoterms, especially Americans. And the reason why Americans get confused with Incoterms is because they sound very similar to the Uniform Commercial Code terms that are in contract law for all of the 50 states. But Incoterms are simply terms that are designed to simplify the responsibilities of the buyer and a seller in a transaction, usually an international transaction, but they can be used in domestic transactions as well if cited properly. So all they do is say who is doing what, what are the shipment and delivery responsibilities in a given transaction? Who is delivering the freight? Who is paying for the freight? Who is hiring the freight forwarder or booking the freight with an ocean carrier? Who is acting as the importer and exporter of record in either country? And then importantly, in today's world, who is paying the duties? And that's why people are seizing on delivered duty paid, because it means what it says. It is the only term of the 11 where the seller or the shipper, the foreign party, or your other business partner across the seas, it's the only term where they are going to pay the duty and do everything for you. And if you are the buyer in this transaction, a US buyer, you just really sit back and receive the shipment. You don't do anything. You don't figure out how the freight is going to get there. You don't figure out how it's going to leave the country of export. You don't import it into the US. And then you are not on the hook for paying customs the duties. And whether companies just don't want to deal with it, whether they can't deal with the duties, whether they don't want the risk because it changes every day, for whatever the reason, people are saying, I've heard about DDP and maybe it will work for me. And maybe it will, but you need to just really understand your supply chain, understand delivered duty paid, evaluate your options before you just jump into it and think, oh, this sounds good and this is going to be our answer. It's not like a magic solution. You don't choose DDP and then suddenly all of your problems go away.
Yeah. So in today's environment, with the tariffs constantly changing and just never really knowing what's going to come next, this does kind of sound like the dream, right?
Yes, it does sound good.
But a lot of people say, it sounds like the dream, but is it ever illegal? Like what's kind of behind what's going on here? Is it too good to be true in some cases?
Yes, and it's not illegal. Like a buyer and a seller can agree to whatever terms they want to in a transaction, and they don't even have to choose one of the Incoterms. If one of the Incoterms doesn't work for them, they can just write down the responsibilities, in normal words. You're going to do this, I'm going to do this. That's perfectly fine. So it's not illegal, but what does need to give you pause as a US importer, if you are, for example, importing something for $1 today and your vendor comes to you and says, oh, if we do DDP, it's going to be 50 cents. That does sound a little suspicious. And then you need to dig a little bit further into exactly what's going on. Because prior to this year, normally when the seller agreed to do DDP terms, your price would increase because then the seller is taking on the responsibility. They're arranging and paying for the freight and arranging and paying for the duties. So with DDP, the seller is actually doing more, and usually the cost would go up with a DDP transaction. So if you hear that it's going to go down and down by a significant amount, when you know that duties are staying the same or increasing, you need to ask the questions, how are you doing this? You need to understand, and it's based on really your relationship with that vendor or supplier. And the issue here is it's true that usually customs will definitely approach the importer of record first. And that importer of record is not going to be this US buyer in a DDP transaction. But the US buyer might still be listed as the ultimate consignee. They may be the notified party on the bill of lading. Or if customs asks the importer of record, who ordered this, they may tell them that it was you, the US buyer. And in those instances, the penalty provisions in 19 US Code Section 1592 are somewhat broad. They don't say, oh, only the importer of record in a DDP transaction. It doesn't say that at all. It says any person, and any person is quite broad and also means any entity. There's also a section for aiding and abetting any other person. So you do need to think about, what do you know about this transaction? What do you know about your supplier? And if the deal sounds too good to be true and the vendor is not doing everything properly, you could potentially be at risk, and have a risk with that transaction of customs eventually coming back to you. They wouldn't come to you first. I wouldn't suspect, but they definitely could find you and start asking questions. And if you say, well, I paid $1, suddenly I'm paying 50 cents, it sounded really good, that may not be sufficient to stop their questioning. And if they find other things, they certainly could dig further.
Yeah, and that makes sense, right? Like, just because it's delivered duty paid doesn't mean the duty's not being paid. It just means you as the importer, you're not paying it. Somebody else still has to pay it. It's not like it's suddenly going away.
And that somebody else, it could be the U.S. entity of that foreign supplier, and they could very well be legally selling the goods to themselves in an intercompany sale set with a permissible intercompany pricing arrangement that meets the customs valuation laws. And that's what companies should have been doing, for the last 70, 80 years. If they're buying DDP, they should be buying it from a company that is selling it, to themselves, or selling it through a related party, or through a multi-layered sale. And they should be doing it properly and in full compliance. And if that's happening, there's nothing wrong with DDP. But some of these businesses that are being set up simply to do this type of work, many of them are foreign owned, and they're classified as a non-resident importer or an NRI. And the administration is well aware that this is going on. And similar to how de minimis ended, the ability for non-resident importers or RNIs to import could end with little notice, or could end immediately, or it could continue. But I think there's a risk that this type of operation, with foreign importers acting as the U.S. importer, that could really end at any time. So that's more of an operational risk for people going with DDP. If they're not using a real U.S. entity that's established in the U.S., the DDP transaction could end somewhat abruptly in the future.
Interesting. So that's one operational risk. What are some other operational or financial risks that companies
face? And from an operational perspective, the biggest one is you really just don't have visibility. So, the good thing about DDP is you kind of do nothing and you just wait for your goods to arrive. But the negative part of that is it's complete reliance on the seller. Like, you didn't book the freight booking. You have no idea where the freight is unless your vendor tells you. If they say it's stuck in customs or waiting review by a partner government agency, you have no idea if that's true or not. If there are any issues at the border and customs, or another agency starts looking at the shipment, you really can't jump in and say, oh, hey, this is my shipment and I can answer the questions, or I have the information. You are not the importer, and you have no, legal right to jump in there and start, trying to resolve the issue. So it really is a lot of reliance on this vendor. So something you need to be thinking about is the vendor capable? Can the vendor import into the US, and can they do it compliantly? And can they do it quickly? And do they understand what they're doing? And if they don't, that may not be an immediate legal risk for you, but it could be an operational risk. Your goods may get seized. They may not be delivered on time. They may not be delivered at all. Then you may have contractual obligations that you can't meet if you're not supplying your customers. And you're going to have, very little recourse, with the exception of maybe other contractual provisions that you have, to make that right for yourself. So that is a big risk. It's really complete reliance on the abilities of the vendor. And again, very experienced, capable vendors that might have been doing this for a very long time, that is a lower risk than going with a company that said, oh, I found someone that could import it, easier than me, and all the other foreign companies are using them. That's going to be a bit more of a risk.
Yeah. And we sometimes also, people are saying, my supplier is paying lower duties than I do. And I think you gave one example there. Maybe that's related to value. But what are some other, or what's a legitimate explanation for why a supplier might pay, like, perceived to be lower duties, and vice versa? Like, what are the red flags?
The only, I think, legitimate, well, not all duties, first off, not all duties are based on a percentage or, in customs language, an ad valorem duty rate. Some duties are based on weight. Some duties are based on other quantities. But the duties that you're hearing about in the news this year are all percentages. And they are percentages of what? They are percentages of the declared value. So that declared value needs to be correct to then multiply the correct percentage and then pay the correct duty. And if that declared value is incorrect, then you have under or overpaid your obligation to the US government. And it very much is a taxpayer driven system. If you have underpaid the government, that is a serious issue. So you want to make sure that declared value is correct. So for the related parties that are selling amongst themselves, they have set up, many of them, I'm sure not all, they are selling to themselves at a related party pricing that has met the different customs valuation tests for related party sales. And hopefully they have had an expert or an accounting firm or an economist or all three look at that valuation and confirm that at each part in the supply chain, a proper profit level is being assessed to that transaction. And if that is happening, then they could be selling to their US entity at a lower price than they are selling to you, the ultimate US customer. And they don't have to share with you that invoice. They don't have to share with you, the US importer, the old US importer, that intercompany price. They can keep that between themselves. And if you have a feeling that, if you know that they are doing that properly or can do it properly, and they give you that type of assurance, oh yes, this is a related party transaction. We've had experts look at this. Everything is well documented. If that is the case, then they could be selling to themselves at a lower value. Therefore, they are still paying an accurate duty rate at a lower value. And they're just not sharing with you the invoice, and it's not really your business if you aren't the importer and if they are doing it correctly. So that is a legitimate way to declare a lower value upon import. Another way is first sale, which is a complicated, but it's basically the first sale bound for the US out of a foreign factory. If you do the work and the documentation, can be used for customs purposes. But all of these require like a knowledge of what the vendor is doing, or at least some familiarity with what the vendor is doing. But either first sale or related party pricing, or perhaps, they just don't want to show you the invoice from the manufacturer. But each time, to be an importer of record, you have to meet the regulations and a statute and have the right to make entry. So you can't really just hold up your hand and say, oh, I'll be the importer. The importer has to have a significant financial interest in that transaction. And for them to do so, it usually means they have taken title to the goods, they have purchased them at a related party price, a first sale price, or perhaps something else that allows them to do it legally at a lower declared value. And you multiply that lower declared value by the appropriate duty rate, and you get a lower payment.
Got it. Yeah.
And I think you also asked about the red flags, and the red flags would be a drastic reduction in duty for kind of no explainable reason. And what we are beginning to see with some clients is there are dual invoicing systems out there where they're sending one invoice to you, sending a completely other one to this importer who's going to import it for you. There could be a valid reason for that. There could not be. Also, we're hearing things like, oh, this importer said they could do it because they have a special deal with the government. Those things are not true. So before you jump into this, if you're a US importer, you need to really, really understand the parties at play. And I think for some vendors, it may be reasonable to go with DDP, and for others, it may not be. So it's not that DDP is always good or it's always bad. I think it's really a case-by-case decision based on the supply chain lane, the vendor, your relationship with them, maybe even how critical the product is to your business. If it's something you don't mind not having visibility for, well, then it might be a better candidate for DDP. But if you absolutely need to control control the movement in each stage, then it wouldn't be a good choice.
Yeah. And from an enforcement perspective, right, we're also hearing that enforcement is shifting more towards False Claims Act theories and types of investigations. So what does that mean for companies who are relying on vendors to do everything right?
DDP, yes. So Customs has its normal penalty statute, section 1592, and anyone can look that up really on, let me give you the citation. Just on www.govinfo.gov, you just look up Title 19 and then search for section 1592. Title 19 is where most of the customs laws are. What we're seeing is in that section, this is where it says no person may do this, and it has the aiding and abetting language. Mm-hmm. So you need to be careful about section 1592. Customs has had that for a very long time. That option is still available to them. And as with many things, the enforcement activity usually follows the actual bad acts, by a few months or a few years. Mm-hmm. So this could trickle out for some time in the future. So they still have the customs penalty statute, and the False Claims Act, as you mentioned, is really a Civil War era whistleblower law from 1863. And what this law allows is it allows the government, but also private individuals to bring claims against any person who knowingly submits or causes to submit a false claim to the government. So not only do you need to be careful about the government, but your competitors could do this, disgruntled employees, other business partners that think you're doing something that you are or you aren't. Really, this has been around for a long time. Like I said, it's really to allow individuals to file claims for kind of government waste. So if anyone really has a suspicion that someone else is underpaying their customs duty, they can bring forward this claim. Sometimes the government takes it on and then pays a percentage of the recovery to the person who brought it forward. If the government is not interested in bringing it forward, then the individual can decide to pursue it on their own. And they do this with usually a whistleblower type law firm. Mm-hmm. And the person bringing it forward may receive a part of the penalty as a proceed for bringing it forward, and the legal fees are covered. So this can be very enticing to some people. And what we have seen, and you can check this yourself at www.justice.gov for False Claims Act settlements. Once a case begins, the government might jump straight into a settlement with you, which can be quite significant from a penalty fee, a financial perspective. The liability is 3 times the government damages, which in a customs situation would be the lost revenue, plus a penalty that is linked to inflation. So again, like the government can collect its money pretty quickly by settling with you. It may, if it chose the case, give a proceed to the person that brought the case, and it has a lower threshold than really going for a fraud investigation under section 1592. So it's another avenue. There's also just kind of basic federal fraud statutes. If you're falsifying any form with the government, or signing your name to something that is incorrect, the government has all of those normal, things that those normal enforcement provisions that it has always had, but it's normally not directed at customs. They can redirect all of those provisions to customs as well, because the customs declaration is not some form that nobody knows or understands. It actually, each customs entry is like its own tax return, its own declaration, and really each one needs to be correct. And each one is an opportunity, for an error or for, a misdeclaration to the government. And each one can be quite serious.
Mm-hmm. So if a company is considering DDP, what steps should they take or can they take to protect themselves from some of these, whether it be contractual or operational or financial risks? How can they kind of help themselves before they have to call you?
I think the biggest one is to really know their vendor and know the vendor's capabilities. And then if you decide to do this, you can ask the vendor to review the U.S. import entries. They may say no. They may not want you to do that. They're private government records. They don't have to do that. You could ask a third party to review them. You could also add compliance provisions into your contracts and or your purchase orders, saying, you can inform them of the customs laws and ask them to sign something that they have read and agreed, or that they will read and they have read it and will comply. But these activities only go so far. So they don't prevent a misdeclaration or an error. And they show that you thought through the process. But if you're just working through the process and having the vendor sign these things and they don't know what they're doing or they don't know what they're signing, then it's only, a surface level type of protection. And it's only as good as what it's actually doing. If it's actually informing them, and then you're actually checking or having a third party check, if they don't want to send you their actual documents. If you're just going with a too good to be true scenario, having them sign a bunch of stuff, then it's not really going to offer you much protection at all.
That makes sense. I mean, know who you're working with. Like, if it seems too good to be true, trust but verify. I think
yes,
kind of with everything, today, it's complicated. We've covered a lot here. There's a lot to consider at every point. Do you have a certain decision-making framework, or do you have a way that you suggest companies evaluate if DDP makes sense for them, either their vendors or even risk tolerance?
Yes. Well, I think you should understand the duty that you're paying today. And that's easier said than done. A lot of importers still don't understand that, and that's understandable because it's changing frequently, but you need to get a firm understanding of what is happening today. What are you paying today on these products from this country? And then you need to understand what would be the potential savings, if any, of going to DDP. So you need to understand, the beginning, and the end, and that change. And then you need to, once you understand what that change actually is, you need to take that against the different operational risks, financial risks, and legal risks. And is that change, is that savings to you, is it worth those other risks in this lane? with this vendor, for this product line? And if it is, then you have made an informed business risk decision. You've calculated the savings, you've understood the risks, and you're going forward, as a company making a certain decision. And I would suggest that importers do that same calculation for all of their main lanes and their main vendors. And what you decide for one vendor and one lane may not be right for another. And that is the complexity of this. But that is the world that we're living in today, where every little decision, every little change is complex, hard to calculate, frustrating. But that's the way it is. And I think the more you do this and the more the organization gets used to thinking like this, you as the organization become a little more sophisticated, and it isn't as hard the next time. And in 6 months, when the Incoterm or the country changes again, or the vendor changes, the organization is, better prepared to deal with it the next time. So it's pretty painful the first time, and some people don't want to do it. They're just like, oh, just take this off my hands. But if you really understand how to to know what you're doing today, know what that change is, actually add up all of the risks. And when the whole organization gets on board with that, then the organization can actually make a good decision instead of just blaming whichever group. Oh, they thought this was a good idea, or, the PO didn't say this, or, within the different, who was actually deciding. When the whole organization can evaluate and decide, then it becomes much more a sophisticated organization, from a trade standpoint.
Yeah. And one thing that I've been thinking about through this whole conversation, and we didn't talk about this ahead of time, but I'd love to get your thoughts. So there are rumors, right, that IEEPA is going to be overturned, right? So
oh, yes,
importers are going to be able to claim back all their IEEPA tariffs. So people should be calculating their tariffs so that they can reclaim them all. If importers have switched to DDP, and their pricing has gone up, let's say, because they're now paying for the duty as well, they wouldn't be able to reclaim anything, right, from their supply.
Yeah, true. They would not be able to reclaim if they're not the importer of record. But then in your contract, you could always put a provision that whatever refunds, a certain percentage would come back to the eventual buyer.
Oh, interesting. I hadn't thought about that.
I mean, just like from a negotiation business standpoint. But yes, so if the Supreme Court does rule that IEEPA tariffs are unlawful, I mean, then the question is, what will happen next? And that is probably a separate podcast.
Yes, definitely.
Either, say only prospectively this decision would apply. It could say only retroactively, only for certain situations. Like no one has really any idea.
Yeah.
But yes, only the people, and really a good importer should be tracking their imports anyway. They should know their entries. There's a record keeping requirement that you must keep your records for 5 years. So all importers in theory should have their records, certainly since February and April of 2025. And they should be able to somehow compile what they have paid in IEEPA tariffs. And the IEEPA tariffs are only what everyone's kind of calling the reciprocal tariffs. They're not like the regular tariff rate.
Right.
They're not the Section 301 tariff from the first administration. And they're not any of the Section 232 or kind of trade remedy type tariffs.
Right.
So even if there is a win for importers at the Supreme Court, there's still a lot of other tariff provisions that will not be affected.
Yeah. And I think, your initial response to that, put it in the contract, I think brings us back to the beginning quite nicely, in that DDP is just one part of a whole contract, right? So it's a whole contract of everyone's responsibilities. And I think that's important to keep in mind as you look at a contract more holistically between what you're trying to do.
And yes, and it really is based on that relationship with the vendor.
Mhm.
And the contract should really be a formalization of that relationship. And Incoterms are no different than that. They're just one piece of the relationship, one piece of the contracting process, and one part of the whole transaction. There's so many other things that you contract for. Why not think through this one? Like,
Mhm.
why not think through if you're going to negotiate on price and quality and payment and specifications and order quantities and all of those other things that are important to your business, how your product is going to get from A to B and who's doing what, is important too. And
Mhm.
that's all Incoterms are. That's all what DDP is
Yeah.
one piece of your contracting relationship with your vendor.
That's great. Yeah. And I think one thing we've covered well is just how complex everything is in trade, but especially this year. Do you have any tools, resources, best practices that you recommend for the trade community when they're navigating these types of decisions?
I mean, there's no easy answer to that question. I really think it is the basics. It is the basics of the customs entry form, the 7501. And the three most important things on there are classification, which is the HTS code, origin. Origin has always been important, but it's even more important now because, the duty rates depend on the origin of the items. So getting that origin correct has always been important, but is now even more critical because it truly affects even more the duty paid. And then the third item is that value declared. And that value declared has got to be correct, or the percentages that you add to that value are going to be incorrect, and you're going to have under or overpaid your obligation to the US government. And this is really a tax. I mean, I think customs, we seem to think of it differently, but it really is a tax provision that the US began even before it was a country. And tariffs or import duties, tariffs and duties are the same word. A tariff is the same thing as a duty, but either one have been used for hundreds of years to raise revenue for governments and to enforce foreign policy goals.
Yeah, that
So
was
really nothing new. There's a long, long history of this. And I think focusing on the basics, origin, classification, and value, and truly understanding those will help you make more sophisticated business decisions and make sure you're in compliance with like your government obligation to pay the duties for the privilege of importing the product into the US.
fantastic. I think that's great advice. Any final thoughts before we wrap up?
And not really. I think we've covered so much. I really think it's a case by case decision. It's not a one size fits all. I think you should consider different Incoterms for different vendors, different supply chain lanes, different products. And the better you use the Incoterms and put them in your contract properly, as well as thinking through those other contractual provisions, helps that business relationship and helps to mitigate customs compliance risk.
Thank you. You've certainly demystified the terms for me today, so I appreciate that on a personal level.
You're welcome.
And that wraps up today's episode of the Bite Pod. A huge thank you to you, Andrea, for bringing so much clarity to a topic that affects importers across every industry. DDP can feel deceptively simple, but as we heard today, the operational, financial, and legal implications are anything but. If you would like to learn more from Andrea or the team at Sandler, Travis, and Rosenberg, you can find their insights, webinars, and updates online. There's a great newsletter that I follow as well, and we'll include links to that in the show notes. And if today's conversation was helpful, please subscribe, share this with a colleague, and leave a review. It helps trade professionals find the resources they need to navigate an increasingly complex environment. Thanks for listening, and we'll see you next time on the Bite Pod.